Now it's time to introduce our guest of this program for his keynote address also, CA Rajive Kumaraswami sir. It's my proud to introduce such a great personality, a fellow member of the Institute of Chartered Accountants of India and associate member of the Institute of Post Accountants of India. Rajiv sir has a total work of experience of 28 years in the financial service sector. Since the opening of the insurance sector for private players, Rajiv sir has been an integral part of the industry, researching various roles. Before joining Magma SBI General Insurance Company Limited in 2016 as Managing Director and CEO, Rajiv sir was one of the founder members of the ICAI Lombard General Insurance, where he was the head of the corporate sector and chief risk officer. He has also been the chief representative of Core SE India license office from 2012 to 2016. Rajiv sir started his career with ICAI Limited in the project financing division in 1995. I request to have a big round of applause. So I request Chairman of WRC to present the memento to our guests, P. Rajive Kumaraswami.
Good morning to you all. Thank you, Arpit ji, and to Saurabh for inviting me. It's a matter of great honor that after close to 28 years of qualifying, I'm getting an opportunity to speak at the Institute. A small way of coming back and giving back. But before I start on insurance, what I'd like to share is, I think this is a profession, a grounding, which provides such all-round grooming of a profession, whether it's the technical understanding of a vast number of subjects, whether it's accounting, taxation, law, operations, and I don't know what the current curriculum is, because when I qualified, we had 4 papers, 2 groups for intermediate, 2 groups for final. The grounding that you get doing audits, the responsibility that you have, dealing with CFOs at such an early age, the power that you get, but the humility that you need to have to understand that you need to wield that power responsibly. And we used to joke about it, and I don't know how many of you know, we had these 3 degrees, ICWA, CS, and CA. And it was such a difficult, program. And I was asking Arpit as we were walking up, what's the pass percentage now? And he said it's now in double digit. And when I passed out, we used to be in probably less than 5 to maybe 7% when we had a good year. So we used to say ICWA is invited to come and write again. CS used to become soon and CA used to become again. So that was the fear cycle with which, we used to approach these exams. But I think on a serious note, what this does is teaches resilience. To study so hard, and unfortunately, if you don't get to roll up your sleeve and again study while you're doing audit courses, I think creates huge amount of resilience. The humility that you are filing papers, indexing it, putting separators, keeps you grounded. And I think as you grow as professionals, I think those are learnings that you should ingrain in your foundation, because there is no substitute for hard work, right? And what Saurabh mentioned in terms of my background, and I'm saying this with all humility, I have not done a single course on insurance. There is the III Institute who offer fellow programs, etc., etc. It is all on the ground learning that I had. For 7 years, I was doing project financing. I did MPA resolution when the NCLT was not there, and we used to go and attend BFR hearings, and those hearings used to take so long and it was so boring to get any resolution. I said insurance is opening up in 2000. The ICAI group said let's start Prudential for life and Lombard for non-life. When I got into the non-life sector, I started doing sales. I was doing corporate sales in the Delhi regional office, going to corporate customers, trying to understand their insurance needs, providing solutions. 2004, I got transferred from Delhi to Bombay, and from selling insurance, I was given the responsibility of reinsurance. And you don't understand the eye of insurance, and then they are told to do reinsurance. And reinsurance is such a complex subject. And again, no courses, you roll up your sleeve, you talk to people, you interact, and it's these kind of forums where you exchange ideas, you talk to brokers, you talk to reinsurers, you read a lot, and that's the way you enhance your knowledge. Uh, in ICAI Lombard, I did underwriting, I did claims, I was the designated chief risk officer. I finally left as the head of the corporate center in 2012. 2012 to 2016, I helped Scott set up the foreign reinsurance branch. As you might know that a lot of the foreign reinsurers and foreign banks have the ability to set up branch offices, and so I helped them set up their license. But like you typically are used to empowerment, I somehow felt the empowerment working for a foreign institution was not as much as I would have liked. So that's when I joined Magma, which is a group promoted by Magma, which is an NBFC and ICAI, which is Germany's third largest group. Today, as a company, we are backed by the Poonawalla Group. They are holding the majority stake. I'm in my 7th year here as the MD&CEO. And there is so much excitement in the sector because it's a very, very happening sector. Right? So, to the young people, to the not so young, I think there is no substitute to hard work. I think the foundation that the CA program provides through training and through education, I think you put your mind and heart to it, there is nothing which is not achievable. Right? Coming to insurance, very, very interesting sector. If you look at last fiscal, and I'll be focusing more on the general insurance or what is called the non-life sector. I'm not covering the life insurance sector, which is a much bigger sector in India. Whereas in the other parts of the world, the general insurance sector tends to be much bigger than the life insurance sector. If you look at the general insurance sector in India, last fiscal we closed the year with about 2,57,000 crores of premium. An industry which grew at about 16.5% growth. Just to give you a perspective, the industry today is 4 government-owned companies, 2 specialized insurers, one who writes only crop, one which only has export credit insurance. We have today 21 private sector companies, either 100% owned or with foreign partners. A sector which allows 74% FDI. It was 26%, which moved up to 49% when the insurance bill passed, and more recently, the sector now allows 74% FDI. We also have an interesting play of what are called standalone health insurers. So we have 5 standalone health insurance companies also in this industry. As we speak, we have a regulator who feels that the number of players are not enough, and we are looking at 20 more players in different stages of licensing coming into the industry. We recently had 2 companies, actually 3 who got licenses. One entity called FEMA, who got into general insurance, and 2 on the life insurance, Credit Access, and ACO, who had a general insurance license, who's now also coming to life insurance. Now, if you look at the total capital that this industry deploys, we have slightly less than about 1 lakh crores, maybe 97,000 crores of capital infused in this industry. And investment book, my sense, is close to about 5 trillion. So 5 lakh crores of investments that we make, and investments from a sector regulator are clearly earmarked. So where you can invest as a sector is clearly defined by the regulator, because you're not only dealing with, say, shareholders' capital, but most importantly, you're dealing with policyholders' funds. So the regulator is very clear that you need to deploy these funds responsibly. So if you look at some of the aspects in terms of what we do as a sector in terms of nation building, I would say out of that 5 trillion of investments, to my mind, almost 2.5 lakh crores would be deployed in government securities and state development loans. So we are, investing in a huge amount in government securities, because we want to make sure that, long duration, or depending on where we are on the interest rate cycle, policyholders' funds are deployed in a responsible manner. Now, what does this sector do? And unfortunately, I think we as an industry have not done enough in terms of talking about what service we provide to the consumer, whether it's a retail consumer, whether it's a corporate customer. I think we are here for unfortunate events that happen in your life, whether it's your car which is getting damaged, whether it's a home which gets destroyed, whether it's a health event which happens, you lose unfortunately a near or dear one. Insurance steps in. So when we come in and we contract, it's a promise to deliver a service on the happening of an event. Right? Now, if you look at what has happened, maybe in the last decade or 15 years, the industry has paid claims when the Gujarat earthquake happened. The industry has paid massive amount of claims when the Mumbai floods happened, when the Kerala floods happened, we had the Tamil Nadu floods, and we are talking about all these events having claim payouts of close to 5,000, 7,000 crores. So we are not talking about small sums of money. And what you need to understand is that in a flood event, paying the claim is not easy, which means that our claim surveyors need to go in the back and beyond in deep waters, trying to assess what the damage is. There tends to be in catastrophic events a paucity of surveyors. So how do you ensure that the policyholder is put back to their own, same position before the loss event happens? Some of the other anecdotes which maybe many of you may not be aware of is how the industry has responded in extreme events, right? When the World Trade Center event happened in America, most of the foreign reinsurers decided to withdraw reinsurance capacity for terrorism risks in the Indian market. So how did the industry respond? GIC, which is classified as a national reinsurer, along with the entire industry, put together a capacity of 200 crores per risk. And over the years, we've been able to create capacity in the Indian market to provide terrorism cover for all Indian risks, whether it's residential homes, whether it's industrial properties, whether it's hotels, whether it's commercial complexes. And through this pooling mechanism of the industry, today the terrorism pool capacity that exists is about 2,000 crores per risk. So we've over the years created self-reliance as an industry to make sure that we respond to the needs of the industry. If you look at what happened most recently, the Russia-Ukraine crisis, right? We had sanctions issued by a lot of the European and the American entities on Russian shipments. Now, if we look at large shipments, which are the marine shipments that happen, most insurance companies do not have capacity which is there in their own balance sheet to cover these shipments. So we rely on foreign reinsurance capacity. Now, typically, if you look at most of the large reinsurers, I mean, if you look at the top five, you've got Munich, Swiss, SCOR, Gently, these are all European and American capacity. So all of them pulled back the capacity. And again, the Indian market, with the support of GIC and the Indian market, came and created a 500 crore bottom limit capacity for all fertilizer shipments, all pharmacy shipments that the industry needed. So these are things which don't come out in the public domain. We do a lot as an industry, but unfortunately, it's that one-off claim which gets repudiated, some fraud that has happened, which unfortunately gets highlighted. Similarly, there is a pool which is there for nuclear risk in the Indian. I don't know how many of you knew about these. This is again something which is under the aegis of GIC and the Indian market. Again, companies putting 5 crores, 10 crores, pooling capacity and ensuring that nuclear plants in the country have cover to the extent of certain capacity. And these pooling solutions over a period of time actually help create self-resilience in the Indian market. I think one aspect which I would definitely want to talk about is what humanity went through and what India went through during the COVID crisis. The insurance industry, especially on health claims, over the 2-3 cycles of COVID, second wave, first wave, second wave, we have paid 29,000 crores of claims on account of hospitalizations that are happening on account of COVID. We had a crisis where there were no beds available. the regulator stepped in with the industry and said, you need to make sure that you give approvals for treatment on a cashless basis within 2 hours. Because we need to make sure that the beds are made available to people who are waiting outside in general wards or need, immediate care. So again, I think the fault lies with us as an industry that we don't talk about a lot of these things that we do. We are here to serve, and I think we do an excellent job. The total complaints, whether on policies or claims, are 65,000, which means that we have 0.02 complaints per policy that we issue, again, per 100,000 policies. So I think we need to talk more as an industry about the good work that we do as an industry. But I thought, this is a good platform to reach out to people in the street, those people who are attending online, to understand that, we are here to put you back to the same position in the event after, say, an unfortunate event happens. So what does the sector actually comprise of? I mean, we try and simplify it as a company into 4 broad product segments. So health is the largest segment, which is very interesting. I think before COVID, motor used to be the largest segment. I think the COVID event has clearly taught each one of us, and I'd urge all of you to actually look at buying your own health insurance. People feel that मुझे कुछ नहीं होगा, पड़ोसी को होगा. You need to cover yourself, because when an event happens, I think the way the medical inflation is growing, even a 5 lakh cover to my mind is inadequate. So please, even if you are covered by your employer, please understand that once you superannuate, you are 58, you are 60, it's highly unlikely that you will get a health insurance from someone at that age. Buy a parallel and keep it going when you're young and you're healthy, because that's the time you will find insurers wanting to come into cover. So coming back, health close to about 97,500 crore, split into government schemes, group health schemes, and retail schemes. Motor, roughly about 80,000 crores. If you look at the commercial business, which is the factory insurances, the liability insurances, the transit, the engineering list, that would be about another 46,000 crores. And then there is the government scheme, which is the Pradhan Mantri Fasal Bima Yojana, which is another 32,000 crores. Now that tends to go up, go down, because sometimes we find that state governments feel that they would like to run it under the trust scheme. They don't want to go through the internal, so there tends to be some bit of volatility. So a huge segment, and as I said, in the last year, the industry has grown by about 16.5%. And even in the COVID period, this was an industry, mind you, that did not reach out to the industry and to the government and say that give me stocks. Because we knew that, you had banks, you had various industries going out and saying, we need subsidies, we need reliefs, our back is broken. Despite paying 29,000 crores of claims, though we had some benefit on motor because there were fewer cars running on the road, but we did not, go and ask the government that we need reliefs, and consequent to that, the industry as a whole made a loss in the year 2022. This year's numbers are still to be balanced. What we are going through is a very interesting phase. If you look at the overall distribution, the level of digitization that is happening is exponential. I think the new millennium want to experience less friction when they are buying a policy. When they get claims, they want instant gratification. So from a distribution point of view, you've got agents, you've got OEM partners where you've got dealerships who sell insurance. You've got banks who provide bank insurance and they offer products to you. You've got a lot of web aggregators where you can go and buy policies online. It could be Turtlement, it could be Policy Bazaar. Interestingly, one segment which is focused both from a banking perspective, which is the SME sector, but we are finding of late many digital players coming, creating broking and digital platforms to cater to the needs of insurance for the SMEs. So you've got Passcare, you've got Plum, you've got Loop. You have a lot of these digital players who are coming in, and these players have the ability to attract private equity venture capital investments. So there's a very interesting play that is happening. Today, if you look at the industry, I would say there are about 600 odd brokers. So if you look at the initial years from an IRDA point of view, to ensure that policyholders' protection was topmost in their mind, their focus was more on regulation for an orderly growth of the market to make sure that policyholders' interests are not compromised. We have very strict solvency norms which are operating in India, which is equivalent to say, since we talked about bank audits, things like capital adequacy that you have in banks. In insurance, we have a concept of solvency. Right? So how much capital do you hold for the business that you underwrite in a particular sector? We've been blessed now with a new chairman who's taken over as the IRDA chairman, and rightly so, his focus now from regulation is focusing more on development. So his vision for the industry, and he's been chasing, the entire industry captains to say that his vision is 2047 insurance for all, which means that every Indian should have a health insurance, a home insurance, a term insurance, and a personal accident insurance. So he has, unleashed a huge number of reforms for the sector, whether it is on product liberalization, because earlier we had a concept that before you launch a product, you need to wait for the regulator to approve it. So it was a whole concept of use and file. Now they are saying you just file the product and you can go ahead and use it, right? So the onus on the sector to ensure that we file products which are responsible, which cater to the policyholders, and we are not taking the customers for the ride. The onus on us is huge, and that's the fate that the regulator has played on us. On distribution, huge amount of liberalization. Earlier, one bank could have 3 general, 3 life, and 3 health partners. He has expanded that to 9. You had the whole concept of insurance marketing firms where each insurance IMF could have 3 insurance partners. He's expanded that to 9. If you look at some of the reforms that have happened on the capital side, insurance companies like banks who raise perpetual debt, we can also raise subordinated debt. Earlier, this was a limit which was kept at about 25% of capital and free reserves, or 25% of net, subject to a limit of 50% of net worth. He's expanded that to 50% because his focus is on driving growth, which means he understands that the industry would need capital. So he's easing the capital regulations to make sure that the industry is able to attract far more capital. If you look at the registration regulation, earlier, what used to happen is any shareholder who was holding 10% in an equity of an insurance company used to be classified as a promoter, and there were a lot of private equity and foreign investors who did not want to take on a promoter obligation but wanted to come in as an investor. He's liberalized those norms and said that the limit will now be aligned with what SEBI provides, where up to 25% you get classified as an investor. So the ability of, say, private equity investors to come and pump in capital, and we've seen it, you might have read it, you have a huge number of private equity investors investing in health insurance, in a lot of the digital players. We've got people like Acco, GoDigit. We also had some interest with private equity investors coming in investing. So the journey that the industry will go through is attracting private capital in an unlisted space. As we generate scale, listing will happen. So if you look at today, the listed space on the general insurance side, we've only got New India, which is the market leader at 16%, which is owned by government, and ICAI, which is the largest private sector company who's listed, and then you've got GIC, who's the national insurer. Well, on the life side, I think you've got more companies like HDFC, ICICI, SBI Life. So I think as the industry evolves and grows and companies generate scale, there would be to get in at least another 2 trillion or 2 lakh crores of capital, which means that the investment book that the industry would have would be close to 10 lakh to 12 lakh crores. So I think there is an explosion waiting to happen. And if you look at, in our internal nomination and remuneration committee, which discusses people-related issues, what is the topmost thing? It is the war on talent. And it's this fraternity and the other fraternity which is there to fill up. And I was telling Arpit that I find it extremely difficult to, attract chartered accountants into the company. And anecdotally, when Arpit invited me saying, Rajiv, why don't you come and speak at the institute? I said, okay, I asked my HR function, can you tell me how many qualified chartered accountants do we have in the company? Because at my position, I'm only looking at competence, right? The degree over a period of time, blurs. It's the experience, it's the foundation and it's the experience that you gain over a period of time. I was personally surprised that we have between 30 to 35 chartered accountants. Only a very base of less than 2,000 people, right? And you would know that in a sales-led organization with 80% of our business coming from retail distribution, we have more field executives who are not likely to be chartered accountants. So if you look at aspects and without demeaning, say a distribution function, the intellectual quotient that is required, I would say 30 chartered accountants on a base of 2,000 is quite meaningful. I went in deeper and said, which are the functions where I have chartered accountants? And then it resonated to me that when we had conversations with some private equity investors and the senior leadership team is introducing themselves, my technical officer normally jokes and says, my name is Amit Bhandari, but I'm not a chartered accountant. Right? Because I'm a CA, my deputy CEO is a CA, my CFO is a CA, my head of internal audit is a CA, my reinsurance head is a CA, my head of central operations is a chartered accountant. I have people in the actuarial function as Kartik was mentioning, not my head of not the appointed actuary, but I have team members who are there in the actuarial function, who are qualified actuaries and chartered accountants. I have people in the underwriting function. So I think the role that a chartered accountant can play with the grounding, the understanding of numbers, the understanding of balance sheet, and the pure common sense that we have, I think there is no role in an insurance company that we can understand. I mean, to my mind, one, the sheer growth the sector provides, some of the regulatory changes which are on the anvil, right? And Kartik would know about this, that we've got an IFRS implementation round the corner. We've got a risk-based solvency implementation which is round the corner. We have a risk-based supervision regulation which is round the corner. So I think the opportunities for chartered accountants, I mean, audit is a small part, right? I mean, you look at the investment books, the opportunities to be on the investment scene, it could be underwriting, it could be claims, it could be MIs. I mean, my colleague who helps me run the CEO's office, she's a chartered accountant. My FP&A head is a chartered accountant. So I think the role, I think it's incumbent on us that we put in the effort. I mean, keep reading, maybe enroll on courses. While I didn't enroll on any course, I mean, I'm sure some technical understanding on subjects will definitely help. I call myself a practitioner. I mean, I don't profess that I'm an expert in insurance. I'm a practitioner. I learn on the job. I learn through case studies. I learn through examples of what other insurance companies do. But what I'll summarize is, I think it's an exciting sector. There's lots happening. There is tremendous growth. We will attract capital. It's not just the insurance companies, it's the entire ecosystem, whether it's the brokers, whether it's surveyors. There are immense opportunities for chartered accountants. So I would, I have promised Arpit that we will engage as a company and try and do as much as we could to elevate the sector and bring it to where it, to my mind, rightfully deserves. I've been a banker. As I said, I think this is a far more complex subject. And we need to get more intellect into the industry to get this to its rightful place. So thank you so much for giving this opportunity.
What a wonderful session we have with Rajiv sir. Let's have a big round of applause from. Anyone have any question? Please raise your hand and you can ask that. I think sir have covered in a very smooth way, so we do not have any questions. Friends, we have one announcement. We have virtual audience also with us. So we have received more than 70 plus vacancy in insurance sector for chartered accountants. So anyone want to apply over there, they can directly share their CV at wrc.connect@ICAI.in. We'll share to the industry immediately. And going towards the vote of thanks, sir, really is honor and privilege me to propose a well-deserved vote of thanks for such a wonderful session where you have discussed the future of insurance sector and ecosystem of insurance and role of CAs over there. Really a highly insightful and great in terms of knowledge sharing. Big round of applause for Sean. It's very, 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 very,